How's it going, everyone? It's Sam. Today I want to go through a trading strategy for the bull market that I really haven't seen anyone else cover. And I think that's because not too many places allow you to do this. Not too many exchanges allow you to do what we're going to be talking about today. And it's not because it's bad or anything like that. I think it's because a lot of them just haven't built out functionality for this. They haven't thought about this. And this is something that you can do that I've talked to exchanges about, and they say, yeah, that's kind of way down on our priority list. But the numbers speak for themselves. This is kind of nuts. If you can do this, especially if we continue this bull run, this is probably the best way to amplify your returns, to make more money if you're going to trade, right? So let's go through this. You can make your own judgment on whether this is right for you. If you don't mind, hit subscribe. Turn on the bell notification underneath the video. The only place that I know that you can do this is Margex. This is a strategy that I think is absolutely a gangbuster strategy for the next bull run. But of course, like I said, there aren't many places you can do this. I don't know of any other exchanges that allow this. Now, what is this? Is it some deep, dark secret? No, it's not. And there's a link to Margex underneath the video in case you want to sign up. They don't have KYC. You can set it up in just a few seconds. A lot of exchanges allow you to go long on cryptocurrencies. You basically leverage and you are able to put up maybe $100 as collateral, and you can get the chance to buy $1,000 of an asset, or 5,000, or 100,000. Not 100,000, probably 10,000, right? 100x leverage, stuff like that. No other exchange besides Margex that I know of allows you to use different forms of collateral for trades. For example, on Bitcoin, right? You're trading the Bitcoin chart. This is one of the 50 plus assets you can trade. You can use Bitcoin as collateral, Link as collateral, USDC, USDT, Caspa, ETH, Wrap BTC, Solana, Matic, DAI, etc. There's a long list. On most exchanges, you use either the underlying asset or most likely you use USDT, which is great if you know what you're doing. It makes it really simple. For example, if I go and invest in Bitcoin, I buy or I set up a 10x leverage trade, Bitcoin goes up 50%, I'm on 10x, I get a 5x return. But what if we're going into this bull market and altcoins start outperforming Bitcoin? Well, if I use something like Caspa as collateral, or Link, or or Sol, or Ethereum, and they outperform Bitcoin, well, I can trade an easier chart that has less volatility, and I can use those other assets as collateral. This unlocks a whole new way of making money. This unlocks the ability to get altcoin returns with Bitcoin volatility. This is really interesting. And I broke down the numbers. See, this is what most people do when they just buy a normal asset, right? Like Bitcoin. Let's say Bitcoin continues to go up in value. Let's just call it 5% to make the numbers easy. It goes up 5% in value throughout the entire bear market. By the end of the bull market, it's worth about twice what it is today. $132,000, $133,000. We'll say this is 15 months from now. Just again, making the numbers easy and round. This allows you to just bet on the fact that maybe late 2025 we'll get out of the market. Maybe end of summer you'll get out of the market. Maybe it's not the exact peak, but if you're just trying to get as much value as possible, well, let's say you do what a lot of people do, which is you dollar cost average. But first you have kind of a lump sum. So let's say you have $10,000. Then you put in $1,000 a month, and I realize not everyone can do this, but $1,000 a month for the next 14 months. So the first month you buy 0.15 Bitcoin, then 0.01, all the way down. This is rounded, but by the end you have 0.3 Bitcoin for Bitcoin value right around 40,000. Nothing to scoff at. You invested 24,000 and you've made a return of 64%. Let's just say you cash that out. Okay. You have 64% in just about a year. That's a good return, right? This is what some traders might do. So they might have their HODL bag. They continue to invest in this. Maybe they do the same thing. They put in a lump sum and then they dollar cost average. But let's say they start with just 6,000, and then they use the rest for trading. So you put in 6,000, you invest 1,000 a month. So instead of putting in 24,000 into your HODL bag, you put in 20,000. The rest, let's say, goes to trading. And there are different ways to trade. Let's just make it really simple. You buy Bitcoin long at 10x. So you're able to actually buy 0.6 Bitcoin. That's how it works. So instead of the 0.06 that you could have just bought spot, you buy 0.6. And of course, you have to pay attention to liquidations and stuff like that. I've talked about that on the channel on previous videos, but let's move on. This is how your gains grow. So instead of a 5% gain, you actually get a 50% gain. Then instead of a 10.2% gain the next month, you get 102 because you're at 10x. So on and so on. So the value goes from 4,000 to 43,000. So you gain a lot, right? You make a lot more money because you leveraged up at the right point. And yeah, instead of getting, what was this, 39,400, at the end of the day, you have 75,000. Okay, so you return 211% versus 64%. This is something that I've talked about before, just like leverage long for a long term duration. Now, some people like to trade, and that can be profitable too if you want to do more swing trading. But there's this third scenario. This is what we're talking about today. So you do the same thing with the $6,000 invested and $1,000 a month. So this is all the same. You have $31,478, $31,478. Okay. But what if instead of using USDT as collateral, you use Solana? Okay. So you have Solana as your collateral. And this is very easy to do. Just go down here, hit Solana. Okay. You hit Solana, and then you open up the trade here. So back to the chart. You open up Solana. Solana is worth 175 per Solana at this point. Let's say you use 22.857 Sol as collateral. Now this might help because there's no precious BTC lost if you're using Bitcoin for collateral. Maybe you're using a degen, like you're maybe using some smaller altcoins. You can use smaller altcoins in Solana too. The gains are still the same, but you're gaining, instead of USDT or Bitcoin, you're gaining in Solana, which we're going to say Solana outperforms Bitcoin. If Bitcoin goes up to 2x from here, if it goes up to 133,000, you would think altcoins would do better than Bitcoin. So we're going to say Solana does a 4x and Bitcoin does a 2x. So this 22.857 Solana actually turns into 246.84 Solana. And Solana's price is also quadruple what it is today. So you have a $700 Solana. Now, maybe you're sitting there saying, oh, it's only going to go to 400 or 500. Okay. It's just the thought process here. Okay. So you have 246.84 Solana. So you basically 11x your Solana because Bitcoin doubled and you had a 10x on it. And then you also have Solana that's worth a lot more. So this 246 Solana is worth 700 each. So you have now a value of $86,400, which is a return of 2,000% as opposed to about 1,000%. Okay, this is a crazy return now. So overall, you risk the same amount on the trade, but instead of getting a value of 74,000 or 75,000, you have a value of 118,000. Now, where's the risk in this? Well, it's the same as this scenario, right? You still long Bitcoin, you could get liquidated, but then you're having a little bit more risk in that you're betting that Solana will still be around and it will actually be valued more. Now, I think a lot of people would say that's likely, but you are still taking an added risk because it's not just Bitcoin that has to do well, it's also Solana. Now, you won't get liquidated if Solana goes down in value, to be clear. You won't be liquidated, but your value would just be less. But still, I think a lot of people would say that Solana is going to be worth more. And maybe you want to do this with a different cryptocurrency. Maybe you're thinking Ethereum or Chainlink or Caspa, like I said. Now, there's a fourth scenario. Maybe you just say, that's a little bit too risky for me. I don't want to invest 40% of my initial bag in this long position. Okay, you could do less, right? Instead of 40%, you do 15%. So you do 15% of your initial bag and then you invest everything else. So at the end of the day, of the 24,000 that you're investing, you're putting 1,500 into a trade and you almost double what you make because of this one little bit of your portfolio that you leverage long. So you still have that 2,100% return, but you're only risking 1,500. So in this scenario, you get a return of 186.77%. You're only leveraging, what is this, 1,500 divided by 24,000. You're only leverage trading 6% of your portfolio. You invested the same amount, but you have a 3x better return than you do in this initial example. 3x overall. You're risking 6%. So again, you're risking just a very small portion of your Bitcoin or of your potential Bitcoin that you could buy, and you're tripling your return. Now, of course, there are more moving parts, right? When you leverage trade, and maybe you want to get more aggressive than this. Some people like to leverage trade with a lot more of their portfolio. Some people like to do things like this, like use these forms of collateral and trade much more often. I mean, imagine if you could do it, you time the market pretty well, and you get Bitcoin when it was $60,000 just a few weeks ago. You 10x leverage trade that, and you use Solana as collateral. Solana's gone up 60%, while Bitcoin's gone up 10%. You do a 10x leverage, right? So you get about a 100% return, but Solana's also worth a lot more as well. You could gain a lot in a very short period of time. Now, like I said, there is added risk. Whenever you leverage trade, there's added risk. But you can mitigate that risk by making sure that you have proper controls and making sure that you're only investing and trading amounts that you're willing to lose, and make sure that you use stop losses and make sure you take profits as well. That's outside the scope of this video, but I just wanted to show you how you can actually amplify those returns, especially if you think dominance is going to change. If you think Bitcoin dominance is going to come down, Solana is going to go on a rager during this bull market, for example, you could get insane returns. But again, kind of shield yourself from some of the volatility, because that's the biggest risk when leverage trading is volatility. That's also how you make the most amount of money. But you want to make sure that if you're going long, you don't fall. The volatility doesn't cause the price to fall down right when you open the trade. As time goes on and as we go up higher and higher, the risk of liquidation gets less and less. But what you really want to protect yourself from is that initial downside. And if you're in a bigger asset like Bitcoin, maybe you can take away some of that initial downside, because we do have relentless buying from the ETFs. We have relentless buying all across the world. But you can also make gains in other assets. Now, make sure that you're comfortable with this. Make sure you understand it. Know that there are different funding rates as well. So when you go on Margex and you look up a certain pair, the funding rate is right here. And this does change over time depending on longs and shorts. It's dynamic, so it does change over time. But yeah, just make sure that you understand all that. Make sure you know what you're doing. Start with a small amount maybe. Sign up, deposit some, start with a small amount. Make sure that you're comfortable with how the market moves. Make sure you understand it. And you can chart right here using TradingView. And when you get more comfortable, maybe you want to put in bigger positions. Let me know your thoughts on all this underneath the video. Again, I just think that not too many people have talked about this. And I think that's because there aren't many exchanges that offer this. Like, I don't know other exchanges that offer all different kinds of collateral for all different kinds of assets. And it's not just Bitcoin. So let's say I go down to Caspa. I want to trade Caspa. Okay. I can use Bitcoin, Link, USDC, USDT, Caspa, ETH. Like, I have all these collateral options for Caspa, and you can continue down the line. The thing about an asset like this, though, is when you trade something like Caspa, like it is very volatile. And some people love that because it's a lot easier to make gains in a short period of time. Maybe you need to use less leverage. But keep in mind, too, that it's easier to get stomped out, or it's easier to get liquidated when you're in a smaller asset like this. Because just, a week ago, it was down 30% from where it is now, or where it was just yesterday. So yeah, just be careful out there. Make sure you understand it. Thank you so much. I appreciate it. Again, there is a link to Margex underneath the video. Of course, do your own due diligence. Thanks so much. I'll see you in the next one. Bye.